what we look for in the market as derivatives traders is a market, okay, which is shifting all the time. Okay, we are not married, okay, to one view of the market, which is that the market will go up all the time. We are open to the possibility of the market going sideways. We are open to the possibility of the market going up. We are open to the possibility of the market going down. And once, okay, we are alive and open to these kind of possibilities, what we do is we identify little points in the charts of what we know. It's not in me to understand everything, okay, which the market is wanting to do. It's not in me at all. I would not understand 100% of all that the market is doing. Nobody can understand the market 100% fully. But what I do is, like, I work with certain setups. Like, I have a setup, okay, which is called the failed option, which you all know about. And if the market confirms that setup, I work a trade alongside it. I also, okay, work on a setup, okay, which is called an IB30 candle, which is my 30-minute initiative buying candle, which was here, right? So the last IB30 candle, okay, came in about 2 days back, around here. So I have a certain process, okay, which I work with it. I do not understand the market fully, and I don't want to understand the market fully. But what I know is that once I have this kind of a setup in place, like this is what I call a special bar out of all the bars which are there. And I make a rule, okay, around this. And I say that the market is positive above this IB30 bar, right? In my way of looking at it, in my way of process, or in my way of looking at it, I would see, okay, that this market is positive about 23,070 and negative below it, okay, and I will activate this trade of about 23,180, provided, okay, I get some greens or demand. What is this bar? So what I'm going to do is I'm going to adopt a middle of the road approach, not really fully bearish, fully bullish, but more of a middle of the road approach, and specifically, okay, look at what we are anticipating in the market, okay, for those 15 days which are left in the month of February, right? We are focusing on the markets on a series by series basis, and if you've been following me on my Twitter handle, that is the approach I like to take. I believe that with every single series, there is a change of hands, there is a change of inventory. And because of the change of inventory, which involves a change of volume also, so there is a need for a change of bias. And we carry a bias, okay, from a start of a series to the end of the series. I'm definitely not going to talk to you about what is going to happen 1 year from now, because I do not know. But what we know is based on the volume which is coming into a series, until that volume, okay, stays till the end of the series, we can make a projection on where we expect the market to be. And we break that projection down from a monthly time scale to a daily time frame. And within that daily time frame also, okay, what we do is we break that from a monthly time frame to a weekly time frame, and from a weekly time frame, what we do is we break it down to a daily time frame. And within that daily time frame, okay, we like to look at that market between 30-minute periods and 3 or 5 or 15, depending on your comfort level, 1 minute time frame, 1 minute, 3 minutes, or whatever, okay, you choose. But what I want to draw upon over here is the equation between buyers and sellers, or demand and supply. And at every point in time, this equation keeps changing. And because it keeps changing, price moves. And price moves only when demand, price moves up only when demand is greater than supply. Price moves lower when supply is greater than demand. So once we understand this market as a basic math between buyers and sellers, between demand and supply, what we have to understand is how do we track this demand and supply line. And all my years, okay, I have been trading, I have been able to do that, okay, only by what I call an order flow chart. There is somebody buying and there's somebody selling. Now, if you just strip yourself up from all those things, okay, which you've been told that there is a technical indicator and this indicator is important and this is going to predict the future, and if this goes to this level, the market bounces and this and that. You know, that indicator itself, okay, was based, okay, on demand and supply. and that it says over there, right? It's oversold. What does it mean? Okay, that there was a lot more supply coming in, or overbought. What does it mean? Okay, that means there was too much demand over there, right? So everything is still based on demand and supply. What we are asking you to do is take the focus away from understanding the market in terms of indicators and start looking at it in terms of demand and supply. And once you get to that kind of an equation where you're looking at the market in terms of where demand is higher, where supply is higher, okay, you will be at a much more better position to understand how it is, right? So just to quickly sum up, okay, where we are right now.
Good evening, guys. Good evening, everyone. A quick sound check. I hope the audio is fine and I'm coming across. Great. So today's session is about the menu, the revised menu which we have put up on Vtrender Charts. So we'll have a quick look at what all we have in the menu, and this has been reorganized. So I'll show, give a quick look of how the menu is now much more well organized, and we can get access to the important features which we have. So let's start with the top. The first, of course, you have the subscription plan, then you have the elite access. I am subscribed to the premium plan, so I have access to all the features, which is very important because to be a trader, you need to make use of the latest information and all the important data which is coming in and which keeps changing. So as per that, we need all these features. So the right at the top of the menu, we have the order flow. So we click on the order flow. By default, we get the 3-minute order flow. We can convert this into the 30-minute. The time frame is there at the bottom. And in the order flow chart, we have the speedometer, the live table, which shows us the speedometer, which has the various open, high, low, close, the value, developing value of the day, and the POC and the VWAP. Along with it, we have the 10-bar cot, which tells us what the overall auction is doing, whether there is more addition of greens or reds. And in the order flow chart, we have these POCs marked on every TPO, which helps us to identify where the sellers are coming in and where the buyers are coming in. So it was important to note this is today's order flow chart, and today we saw that big red coming in right at yesterday's VWAP, and that is the reason we were not able to take out yesterday's VWAP, which was at 24866. So when you see in order flow the sellers are ramping up, you can see in this B period how we have more reds. The color red indicates aggressive selling compared to the corresponding buyer. So we had more reds at the top above the A period high, and above VWAP, yesterday's VWAP, we did not get much of demand. Hence, we remained below this 24866 and formed a normal day. Yes, because it was settlement and 24,800 was the chosen strike, and that is where all the OI had accumulated, and they made sure that it closes around that level. So I'll come to that in a bit, but the order flow chart shows us the POC, the VWAP of every bar. We have the table at the bottom, which gives us every TPO information separately. So we can see how the cot was red. The rise which we got, we opened lower and we got back into previous day's range, but the rise came on red cot. So whenever you're getting a up move on red cot, you cannot trust that. That is the reason we were not able to make any range extension higher, and we remained in this narrow range all through the day. And what we saw in the K period, was once swipe above the POC and the VWAP, but here again order flow showed us zeros on the buy side. So this was very clearly telling us that this YVWAP of 2486 is not getting any demand. Hence, the sellers who had come in yesterday were still holding, and that is the reason we went on to make this close around the lows of 24775, because there was not much demand seen at the VWAP of yesterday. So this is how order flow helps us to take important references, and for tomorrow this unvisited POC of K period, which is at 24849, would be our reference. Even the POC of today is aligned there. So that will be our reference for tomorrow. In case we are looking for any upside, we will have to take off this zone with buyers seen in the order flow. So this is as far as the order flow chart is concerned. You in the menu you can choose which order flow you want to see. All the instruments are there. In options, you just need to put up the option and it automatically the drop down comes up. So in case we want to look at the monthly, let's have a look at 25,100 monthly option, and we'll go to the order flow chart of the 30 minutes. So you can see how we got an IB30 which got triggered about 366, and it went on to close around the POC. The POC was at 385. So this is how you need to figure out the order flow charts. It will give you very important cues of where the volumes are coming in and what is driving the market. 25, and you can see this is the 3-minute order flow of the 25,000 put of today's expiry, and you can see how after that KP rate swipe, we got this IB3 at VWAP, and the lows of this IB3 held on, and we went on to uh, close at 206. Because this was the monthly weekly close, this put did not give too much of upside, but the monthly puts went on to give little more high up. So this is where you can look at the order flow chart and of any instrument, be it index futures, any of the options. And you can also use these order flow charts to uh, use which can be used to sell options also. If you're an option seller, you can look for IS signals, and accordingly you can take short trades in options. So this is the first section, order flow. Then second section is very important because market profile helps us to understand the structure. What we do, we get important references using the market profile. It explains us what the structure is doing. For example, we give lot of importance to A period singles. So when we gap down last Friday and we made new lows for the series, but we left this initiative buying tail, we knew that the buyers are coming in. So this was telling us you need to look for upside. And after this, you can see how on Monday we opened, tested this value, and continued to probe higher. We saw good buying coming in on Monday. We left this extension handle, but what happened is when we went on to make highs, we started to stall in this ITPO singles from 12th of June, which was a trend day down, which was last week's settlement. Last Thursday, as I was mentioning, we give a lot of importance to A period singles. So you can see how last Thursday started with an A period selling tail. So we knew that the initiative sellers are in. And that is the reason we got a good move lower. We left an extension handle and we went on to close around the lows. So after this imbalance continued with this gap down. But here when we made new lows for this series, we got some demand coming back. And in order flow, the 30-minute order flow, we knew that 24725 in the start of the June series showed us some buyers coming in, because from 24725 we went on to probe higher in the first half of the month, wherein we hit this 25307. There we saw the series POC shift higher to 25181, and this initiative selling coming in on 12th. So we came down back to make new lows. But again, once again, this 24725, which saw buying in the first week of June, held, and we again saw buyers coming back here. So from here, we again made a move to 25025. But here you can see we made similar highs, which was showing us exhaustion. And these similar highs came in a zone where you had initiative selling. Sell side extension handle was there, and you had a zone of singles. So you know that sellers are active over here. So when you're not able to take off that zone and you're leaving similar highs, you know that the upside is getting exhausted. And more clarity came on 17th, where we left an A period selling tail at this POC. So with this as a reference, we knew now it is going to test the buyers of this profile of 16th of June. And that is what has happened. We have made lower lows on the next 2 days, and we have almost tested this lows of 16th. So this is where we are now. And because today was a 313 profile, 313 profile in the sense you have tails at both ends, and it was a normal day, narrow range. We remained in the initial balance all day, and you can see how the value is completely inside previous value. So in market profile chart, we can merge these 2 days, and we have a nice 2-day balance from where we can look for a imbalance to start. So this is the POC. 24824 is the POC, and we will have to look for a move away on volume that open tomorrow. If we negate this tail, will be our first objective. And what we do at that important 24723 would set up the monthly expiry for the June series. So because this will be the last weekly settlement for the June series, it will be very important to see how the volume starts shaping up from tomorrow, and whether we get an imbalance from this zone, and if we are getting an imbalance, which direction it will be, and how long can it continue. So this is what market profile shows us. Market profile has lot of important features. You have the live table. You can just right click and display info in the right side bar. I'll just unmerge these profiles. So what it does, it gives you the information about the latest profile, not just the open, high, low, close. It also gives the market profile references of the value area high, value area low, and then we have the IBH, IBL, we have the open interest, and then the day type. We also have TPO wise volumes and the average of what the volumes were today. So we always maintain that volumes precede price. So when the volumes are low, you know that the range will be a smaller one. When the volumes are high, you can expect a bigger range. So that is what we need to watch, and that is why this volume percentage helps us. So you can see how 5-day average and 14-day average, most of the volumes today were lower. It was just 58% of the ATPO volumes and 66%. So you know that the volumes are not there for a big range day. So throughout the day, except for the HTPO and the MTPO definitely, because it was the weekly settlement, you will see some increase in volumes and some move. Rest of the day, you had very low volumes. In fact, most of the TPOs had less than 50% volumes. So you know this kind of a day is tailor made for option writers. And the only trade which is a good trade setup for today, days like today, is a short straddle or a short strangle, where you identify the range and go short early once the open type is done, and you just trail that position. So another important feature which I want to mention here is, if you're looking at futures, you always want to go with this value area based profile, VVA, because we want to go with the volumes always. In spot, we don't have volumes, so spot you will have the TPO based value area. But in futures, whether it is options or futures, wherever you have volumes, you'll always go with this volume based value area. So this is, as far as the market profile is concerned, you have the different time frames here. You can you can have a look at the monthly series, and I'll quickly show you how. If I split the volumes, you can see the one HVN over here, which was the base when the June series started, 24725. And when we made this new high, the POC shifted higher to 25181, where you have this horizontal line. And now we are right in the middle at 24872. So today also we stalled right at 247872, and we'll have to see how this profile closes. On the monthly time frame, this is a neutral profile because we have broken both the highs and the lows, and we are right in the middle. So there is a very good chance of us closing as a neutral center profile, but we still have 5 sessions left, so we cannot just say for sure, but we can keep a track on it on a day-to-day basis and see how this goes. The plus point, if we close as a neutral center profile on the monthly series, is that in July we are due for a imbalance, because you can see how the value was completely inside the May series value. And if we are in a neutral center structure, it tells us that the buyer and seller both are in equilibrium. So from a neutral center profile, be it on any time frame, you can expect a trending move or imbalance. So we also follow it on a daily chart. Whenever we get a neutral center on a daily time frame, we know that the next day could give us an imbalance, and we are ready at open for at the next day. So that is what the market profile, the structure tells us. So this neutral sector is happening on the monthly time frame. So the bigger the time frame, the bigger will be the imbalance. So but that we'll come to that later when we start the series of July, but we still have 5 more sessions in June to negotiate. So we will see how we close in June, and then we'll definitely keep posting the levels and the references and cover them in our webinars also when the June series starts. So coming back to the market profile chart, it helps us to understand the structure. We also have the weekly series. In futures, we have the weekly settlement right now from Friday to Thursday. So today was the close of the weekly settlement. So this weekly chart will get over end of the day. We will have this value. So how it helps us is, compared to last week, we were forming lower value. We were completely below previous week's value. So this helps us to understand that this VWAP and this POC are uh, supply points, and you can look at them as references when an imbalance to the upside is started. On the lower side, this POC was our reference 24725, which we have tagged and we are holding for now. So this is how we look at the weekly charts and identify important references. If we are getting an imbalance to the downside, then we have this zone of singles from the first week of May, and 24200 is that extension handle in the June series. So if we get a move lower, then this 24200 would be one important reference on the downside. So these are references which we get out of the market profile on all time frames, and then we look at the order flow and the volumes coming at each reference to understand what we can expect going forward. So this is as far as the market profile section is concerned. And then we come to the candlesticks, smart candlesticks as we call them. So why are they smart? Because they are unlike other candlestick charts. And just like in order flow, you have different time frames in this. You can select which time frame you want to choose, and it not only shows us the candle, the open, high, close, and whether the candle is green or red, but it also gives us very important market profile and order flow nuances. So we have the VWAP, which is marked in green. We have the days POC, which is in white, and then we have all the order flow signals marked on this. So this yellow overlapping color on the green bar is a IB3. So this IB3, when you see an IB3, you want to go long above the IB3. So you can see how this IB3 never got triggered because we never went above the highs of this. So you can get this entire day. In fact, you have 2 days of data here on the 3-minute chart in one screen. So you know what has happened from yesterday. You can see how the POC was at lows yesterday when we opened. We got some buying, and from here 24824 was the zone from where we got buying even on Monday, 16th of June. I'll quickly take you back to 16th. In fact, we have an easier way of going to any date you want by going to this calendar, which is there on all the charts, and go to the calendar and click OK, you go to that particular days. So here you can see how we had this base at 24824 from where we got this extension handle when we probed higher on Monday. So if we come back to today's chart, yesterday's chart, you can see how yesterday right at that 24824 the POC was formed and we got some good buying. We went on to make a high of 24978, but there the POC shifted to the top. So clearly this one chart is telling you where the buyers came and where they booked. Shifting of the POC from 24825 to this point of 24960, this clearly tells that the buyers who had come in at the open are booked. And from here you can see we were not able to get above this POC at all because they were selling all through. And once we broke VWAP in this 1021 bar, we went on to make lower lows and remain below VWAP. That is the reason this VWAP of 24866, which we were looking at in the order flow chart, was an important reference. So today's order flow, the candlestick is showing us a green bar, but we saw in order flow how we got sellers at that point. So in fact, I can shift this. You can convert any chart to market profile or order flow. You have the option at the top, at the bottom right. This is the candlestick. You have the order flow symbol next to it, and you have the market profile. So if I click on the order flow chart, and if we go to the B period of today, just to see how the order flow looked at that time, I'll take off the global volume bar. And you can see how when we made these new highs, we got this 432 seller at the top. And then as we continued, we got another big red. So that was telling us that the sellers are roping in. I'll just quickly going to the. So here you can see you got this 432 RS right at the highs we made right at the start of the B period, and then we got this big 1178 seller in the 10 AM bar. So order flow was very clearly telling us that there is no demand coming in above that VWAP of 24866. That is the reason on the 30-minute order flow we were stalling. A TPO and C TPO high was right there at 24866. In fact, the swipe we made in K also was right there. So this is how you can mix and match. In fact, we have this dual window mode in the panel on the right hand side. If you have a bigger screen, you can even go for a 6 window mode. You have 3 window mode, 4 window mode, and then you have the dual window mode. So in dual window mode, what you can do, you can have combinations of two sections. You can have the market profile on the left, 30-minute order flow on the right. You can have the candlestick on one side, the order flow on the other side. So you can use this as per your requirement. And this multiple chart layout is a very useful tool which helps us to know what is happening. Because for example, today was a day where the 24800 call and put was being written. So in this 2 window mode, you can also have the call and the put have the order flow chart of both of them. So if you are short in the straddle, So we have the 30-minute order flow of the call on the left and the put on the right. So you can see how both of them began to decline after the open. And as we saw, the open type was an open auction in range, and we knew we didn't have any volume expansion. The volumes were below average, and we remained in the initial balance. So both these continued to come down. Yes, both of them gave a swipe, but that swipe was used by the sellers to again come back in, and the late sellers were the ones who got trapped. You got a swipe above VWAP in the J and K period in the call. You can see how we made highs of 53, but then again it came down to close at zero. Same thing in the put, it kept moving lower. Only swipe came in the afternoon where it made an attempt to get above VWAP but got rejected, and that also came down to zero. So using this dual window mode, you can monitor two legs of the same strike. You can monitor market profile and order flow. You can monitor any call and put, and accordingly look to make use of them. If you have a bigger monitor, you can go for this 6 window chart, and Shai has shared that screen, that bookmark of monthly options, of how the monthly options, knowing what is happening on the monthly options, keeps us in stead. If you are getting multiple IS30 signals in the call side, you note that the calls are being sold. So accordingly, you can prepare yourself for the auction. So coming back to the menu, so candlestick, I'll just come back to the candlestick chart. Not only shows us the order flow signals, the market profile references, but it also tells us gives us the volumes and the COT. In the options, we have the DOI. In futures, we have the COT. Why we have DOI in options is because it helps us to identify where the OI is loading and where it is coming down. So you can very clearly see in this swipe above the VWAP. I'll just increase this. In this swipe above the VWAP, this 24800 call saw some big OI drop. It was the biggest of the day because what had happened, the writers who got stuck here, the POC has shifted to the lows. The writers who came in late, they were forced to come out, and they were forced to come out, and this is showing us the sign. Yes, writers again started to come out, written at the levels of 14 and 10. They were forced to come out, and you can see all that in this candlestick chart. It is what is just in options. It shows us the OI. This orange line is the open interest. You have the IBH and IBL, which are dotted lines, and then you have the signals and you have the volumes. So you can see how the open interest was steadily climbing till 2 o'clock, and then you saw a quick drop. So these are fast moves. You can also see in the order flow of 3 minutes how a move above the VWAP gave a very quick entry, and the 3 minute order flow will also keep you instead of how long you need to remain in this call. So you can see this is that bar. When you get this kind of a bar which you have got at 157, you know that the option writers are being forced out, because this is a getting, and once it gets back above the VWAP, it has gone on to hit this NPOC of 54. So for how long do you stay in this bar? The bar after the which breaks the VWAP, the low of this bar becomes an important reference, and then you get this IB3. So once you get this IB3, the low of IB3 becomes your reference to remain long in this call. So that is how you make use of the order flow signals also, especially on expiry days where you get these kind of swipes, and you know how long you need to. If this would have held, you could have expected more upside in this call, more short covering. But once this broke, you can see how the sellers again started to load in, and once you get these zeros, this 239 bar where you have got these zeros right at 24 is a signal that you can again go short because this bar has come below VWAP, and with this 35 as reference, 24 is your level to short this call with a stop loss of 12 points. And you can see how this swipe stalled right at the place where zeros had come in. So this is how you track order flow. This is how you make use of the order flow, and they give you, we have mentioned and we have spoken about how zeros in the order flow becomes support or resistance. So when you're getting this kind of a bar, this becomes resistance, and when it is stalling right here, you know that this is headed for downside. And that is what happened. We went on to close that call right at the lows. So this is how you can make use of this. And candlestick was telling us how the OI was swiping lower, this. So for us to remain long, this is that IB signal which we got. We had to defend the low of this IB, and this OI had to continue to keep going down. So what it is telling us, the OI which came in till here, till it broke this level 54, was safe, and those sellers came back again when it reached that level of 54. But the sellers who came in later were the ones who got hit in this. Overall 24,800 straddle closed at 0, closed at 7, I think, sorry. So it closed in single digits. So the initial sellers of that straddle made good money, but not the people who came in late, because they had to endure this swipe to 53 in the straddle. And you can see how the POC of this call was right at 54, and that is where it stopped. So we have covered in sessions, in previous sessions, how the POCs become important references. The earlier POCs also become important references in the options chart. So candlestick of futures gives us the caught. So if I open up a candlestick, you can see you have the caught over here. So here you can see the morning, the move higher was on red caught. You have got only red spikes. This is the caught. The column below the candlestick is the caught, and the lower column is the volumes. In options, you have the DOI in the middle column, the volumes at the lower, and the candlestick at the upper part. So this is, as far as the candlestick is concerned, all the information which we need in a market profile and an order flow chart is inculcated in this candlestick. So that is the reason we call it smart candlestick, because it has all the information which you need. So the next section is the global bookmarks. So what are these global bookmarks? I just showed you how you can use the dual window mode, and you can have the references of market profile on one side and order flow on other side. So these are some global bookmarks. You can save that layout from the right side menu, and it will get saved. So I'll just open up one of the global bookmark which I have saved. So when we are trading, we make use of this combination a lot, where we have the market profile chart of the option on the left, which shows us the important references of that particular call or put, and then we have the 30-minute order flow on the right. So it gives us, so you can see how the opening bar, this 177, gave us the RB signal. So this 177 was support. So if you are holding longs, 177 would be a support, and you can see that 177 was not broken for the rest of the day. So these are global bookmarks which you can save by clicking on this link at the right menu. You can save whatever bookmarks you want to in your style. So the global bookmarks, what I have with me, see, this is one very important global bookmark. I'll come to the volume X because we are short of time, running short of time today. So we will have the part 2 of this session next week, wherein I'll cover the other menu items which are there in the chart. I'll just cover this global bookmark which I have, which has the Nifty volume X chart on the left and the Bank Nifty volume X chart on the right. So this helps us to tell which of the volumes are increasing. So when you see this swipe in the put volumes, you know that some of the put writing is being taken to task, and you can immediately look at the order flow chart of a put and see if you're getting any IB signals which are getting activated and take action on that. So for example, when you got this swipe, you can just get to the 24,900 or 25,000 put. So what I'm doing, I'm having the Nifty volume X chart on the left, and I'll just have the 25,000 put order flow on the right. And what we need to see is we need to identify when these puts are starting to swipe. The volume X is swiping, and then we need to see where we are getting the signal to go long in. So, and you'll get multiple opportunities as this. So you can see how at 12:36 we saw this swipe. This swipe was happening at 12:36. You can see this put swipe diverging, and here you get this IB. So when you get this IB gets activated above 192, and 192 your stop loss would be the low of the IB, and your targets would be as per this range. So we went on to hit target 1 and target 2, and we get this new IB3, which would have got activated above this 214, but it did not get above 214. So you book out, and more so you get this IS also. So you know that this is kind of stalled. The next move in this can come when you take off this 214. So after this, you can see how we went on to make a retracement down, but then again into the close, this swipe is giving us another IB signal, and this IB signal, the low never broke, and we went on to close at 206. We already covered this. So this is how you can uh, make use of this dual window mode. uh, there is a question about how to mark levels in option order flow chart. We cannot mark levels, but in market profile chart you have the option of adding KRLs. You just need to go to the profile, right click, and you can see you have this in the right click in the menu. You will have an option of add KRL. So we just need to create custom KRL, and you can mark whatever level you want and you can save it. So if I just take you to my Nifty spot chart, which I share it in the report daily, you can see I put up the hypos which are marked in the report as KRLs. So these were the hypos for today. So our first bullish hypo was 24829, but we were barely managed to stay above it. And the lower one also, we broke below, but we stalled right at this support of 24739. So these are KRLs which I have added. These are custom made, which you can add on any market profile chart and use it as your reference. So when we have the monthly chart, I'll just open up the monthly chart of spot, and I'll show you the important KRLs I've added as per the series of June. So you can see how this turquoise line is the rollover point of this series 24945. This is a selling tail pullback high from October, which we almost tagged this time. And this is the POC of last month, and this is the VWAP of the last month. And then you have the HVN, which is marked, and this is the buying tail. So you can mark these references on the market profile chart, even in options, in futures, on any time frame. So you can make use of that KRL feature, add KRL feature, and make use of that. So whenever you open up the chart, you don't need to again revise what are the important reference. Immediately you know that on monthly time frame, these are the important references. So for example, when we were approaching this pullback high from October, and we are leaving this selling tail, you know that the upside is capped and the seller is coming back. So right from that 25222 high which we have made a retracement lower to 24500, 24475 in fact. So that helps you to keep in sync with the bigger time frame. So this is the global bookmark, and I'll just quickly talk about what are the sections which are remaining before we wind up for today. We will cover these sections in our next webinar on next Thursday. So we have the expert access, where we have the spectrum chart, we have the NTM volume X, NTM OI, gamma, writers cache, and the MP bookmarks. I will cover all these sections in detail in our part 2. And then we have the premium access, which gives you the total open interest, volumes of the option chart. This is entirely the option inventory, and you have the all important option table, which we have covered in one session itself, one separate session. So we will cover these expert access and premium access sections in the coming week, and hopefully you are able to figure out how you can make use of the features which we have spoken today. So because the time is running out, we will stall today's webinar now, and in case there are any questions, I'll be happy to answer them before we can wind up. And we'll continue this section next Thursday at 5 p.m. and we'll complete the rest of the menu of how you can use them more effectively. So in case there are any questions, please feel free to post them, guys, and I'll be happy to answer them before we wind up for the day and prepare for what promises to be a good trading day tomorrow. Because all of this week we have been forming a balance, so we can expect an imbalance tomorrow or on Monday, and that can continue into the expiry of this month. Yes, we have the participant wise data section also. This is the participant positions right at the bottom of the menu, and this is updated every day in the evening once we get the data from the NSE, and you can see how you have the 4 segments cleanly marked up, and you have the date wise positions also. We also have a post regarding this which is updated on the website every day, so you can also go through that. Option chart, same thing. In the order flow you will not be able to mark the options, but if you want to mark in the market profile chart, so same thing. So this is the market profile chart of 25,000 put. So you can see how these are already indicated. So if you want to mark an important reference, because this is a POC which has not been tagged 229, so this will become an important support. So you just need to create custom KRL on the option chart. You can use this, or you can use this custom, and you can mention what description you want to put up and click on save, and it gets saved, and that KRL will be seen in this option chart. So market profile, you can add the KRLs. In order flow, you already get the NPOCs, the POCs which have not been tagged, already they extend. So you will keep getting those references on that. Participant wise data analysis, we can have one separate session on it. I think Shai has already covered that in one of his sessions, but anyways we will definitely look into that and get back on that. So thank you guys for joining in. That is it from my side for today. We will continue with this segment next Thursday, as I mentioned. And in case you have any queries, you can mail us at support@vtrender.com, or you can ping me on Twitter. My ID is @uttamgoel, and you can DM me on X, and I'll be happy to answer whatever queries you would have regarding any of the sessions which we cover. So thank you for joining in, and we will catch up again next week, and hopefully have a great monthly expiry of June, and we will be in touch for whatever important references which can mark out on day-to-day basis. Thank you for joining in, guys, and have a great evening.